The gentleman from Florida, Mr. Posey, is recognized for 5 minutes.
Well, thank you, Chairman. Our topic today illustrates one of the great paradoxes of regulation. On the one hand, governments have sought to regulate prices to protect consumers, only to find out that doing that restricts the supply of the good or service and actually hurts those they seek to protect. And, you know, in an everyday perspective, I mean, a lot of consumers would jump for joy if Congress passed a law that said you couldn't charge over $1 a gallon for gasoline. A lot of people would be real excited to say you really did the right thing. But we know what would happen, don't we? You would have zero gasoline. And so, you know, is it better to pay more than $1 for a gallon of gasoline or not have any gasoline? In that regard, I ask unanimous consent to enter into the record a 1970 Newsweek article by the late Milton Friedman entitled Defense of Usury. There are two more items that
Without objection.
Thank you, Chairman. There are two more items I'd like to put in the record. The first is Rolf Nugent's classic paper that appeared in a Harvard Business Review in 1930 that showed how half percentage reductions in maximum interest rates across 3 states was correlated with funding for small loan needs of low-income people and the unfortunate growth in bootleg lenders.
Without objection.
Thank you, Chairman. And finally, a 1975 paper from the Florida State University Law Review that details the history of small loan regulation in Florida. This paper details the ways the market innovators got around rate ceilings. The articles will help remind us that regulating small dollar loans have a wide range of unintended consequences, including denying many low-income people the loans that they need. These papers also underscore another important aspect of our hearing, and that's regulatory arbitrage. Interest rate caps in one or more states make incentives for market lenders to innovate to make loans to residents of those states who need them. They have done this in partnership with banks in other states. Mr. Knight, what role do small dollar lenders or loans play in our economy? Do they provide essential financial services?
Yeah, so small dollar credit can provide essential financial services for borrowers. There's definitely evidence. I should say that for small dollar credit, particularly say storefront payday, the economic evidence is mixed as to whether or not access is a good thing or a bad thing, but it's pretty clear that for at least some borrowers, it can be absolutely essential.
Okay. I believe that the regulation of interest rates, as I mentioned, is a real paradox. And some states seek to protect consumers, and they make money unavailable to them, unfortunately. This two-edged sword is difficult to balance sometimes. And so, you know, which aspects do you believe is more important, protecting from high interest rates or protecting from credit scarcity?
I believe that protecting from credit scarcity is frequently more important. I believe that in a functioning, competitive, and well-regulated market, I mean, there is definitely a role for regulation to play, consumers should be able to access credit and that they will be able to address their credit needs because frequently they're accessing credit to avoid a greater harm. There's always the option to not take a loan, but if you're taking a loan to avoid a greater harm, that loan should be available to you.
The CFPB has delayed the ability to repay or mandatory underwriting provisions until November. CFPB originally proposed to rescind the entire rule. Can you evaluate the underwriting provisions in terms of its benefits, costs, and impact on consumer credit availability?
Sir, I'm afraid I cannot do that. I have not done a sufficient study of that to have an informed opinion.
Okay. In fairness, lady on the far end from California, do you want to respond?
I'm sorry, can you repeat the question that you'd like me to respond to?
Yeah, it was talking about the delay of the CFPB rule, that they had the ability to pay rule.
So my comments on, we would like to see that in California, and that has actually been a challenge to us, and part, not full, but part of the reason we also stepped up to pass our own rate cap law.
Okay. Thank you very much. Mr. Chairman, I see my time has expired.
The gentleman yields.